with our speakers to go over today's homeowners and flood insurance 101. Welcome. The floor is yours.
Well, thank you, Donna, so much for having us, and really appreciate the time today. I'll first introduce myself, then turn over to Sutanya to introduce herself. My name is Tom Campbell. I'm a sales manager with Comparion Insurance. Have been with the company for about 17 years. We are a Liberty Mutual company, and I'll talk to you about who exactly Comparion is in a minute. But beforehand, go ahead.
Good morning again, everyone. My name is Sutanya. I'm also I'm an agent with Comparion Insurance Company. Been in the industry for, this is my 5th year. Service Pennsylvania, Delaware, and New Jersey.
And we are one of the newest affiliate members, I would say, of the GPAR. We just joined this past December, made it out to the event in December, and really looking forward to growing our partnership with GPAR and, all the, different members of the organization. So to kind of give you a little bit of background, I'm sure not many people have heard of Comparion before. We are a subsidiary of Liberty Mutual. We made the change to Comparion just this past August. As you can see on the screen, Comparion is by all means a made-up word. It is a combination of the words companion and comparison. In the past, our agents could only sell the Liberty Mutual homeowners insurance, auto insurance, and so on and so forth. But as time went on, we gave our agents the ability to sell additional carriers. So someone like Sutanya is one of our local agents, and she has the ability to sell insurance policies through not only Liberty Mutual, but Travelers, Nationwide, Plymouth Rock, Safeco. So what that means is that for our clients and for our realtor partnerships out there is that we can be more things to more people, in the sense that there's not many situations in which there's maybe an underwriting concern about a dog breed, or maybe a flat roof, or maybe knob and tube, in which we can't help. So it's a lot of a combination of the carriers that we have, the risk appetites that we can place, and also the consultative nature of how Sutanya conducts her conversations. One of the things we always say to our clients is that when it comes to homeowners insurance, right, you can't look at it as a commodity, right? You can't say 15 minutes save you 15%. This is the biggest investment people are going to make in their lives, right? And the insurance agent's got to make sure that it's protected properly. And we never, by having that conversation with someone like such as Sutanya, that you make sure that you have the right coverage, but also at the right price point. All right. And like I said, Sutanya also mentioned this, but this kind of gives you a breakdown of the states that we have licenses is. That if you do have any states that you are licensed in, that you are doing real estate transactions, please, by all means, we'll provide Sutanya's contact information, then let her know, because we do have other agents that can help out in some other states, especially across the entire Eastern Seaboard. But like we said earlier, there's a little bit of a screenshot of the additional carriers that we have under the Comparion brand. Perfect. So one of the things before we kind of get started with the homeowners and flood 101, Sutanya and I added this kind of this slide really kind of last minute. And it was just more of an FYI about things that are currently going on in the, both the home insurance industry and also the auto insurance industry that really kind of picked up over the last 2 to 3 years. And Sutanya and I were talking to Donna and Matt about this as we approach the call, is that there are so many changes right now with inflationary pressures and the economy that are impacting homeowners insurance. So as realtors, if you're looking at closing costs and things of that nature, and what exactly to kind of prospect what home insurance would be, I think, years, in the 2010s and kind of moving forward, depending on the size of the home, maybe you had a $300,000 shelf value of a home, you probably think about homeowners insurance being in the range of anywhere from like 700 to 1,000. That has definitely gone up dramatically in recent years since the pandemic. And so we just wanted to get it out there that as you're kind of speculating what homeowners insurance will cost, that number has definitely gone up in recent years due to kind of what you see on the screen. The things that I will point out the most here is definitely the cost of lumber and skilled material. Lumber, obviously we've heard that before, but also, as you can see on the screen, this industry is down roughly 200,000 workers right now. So the labor costs and the supply and demand of that has really kind of caused it to go up. There's also kind of new coverages that weren't available in homeowners insurance in the past. Not all carriers have these just yet, but we always like to bring them to the attention of everybody. Sewer line coverage or service line coverage, you might hear it. This is basically running from the underground. There are pipes running from the street into your home, right? Your sewage pipe, your water pipes. And if that ever ruptures underground, it's up to the homeowners to pay for have their front lawn dug up, the pipe fixed, and got it put back together. But there is now coverage available for that. A lot of water companies in the area offer that, but a lot of insurance companies are starting to offer that coverage as well. Home sharing. If someone rents out their house via Airbnb or Vrbo, you can have this endorsement on the policy that when that house is rented out, it is protected by the homeowner's insurance policy. If someone just rented their house out without having that coverage, and there was a claim, insurance company by all means could come in there and deny the claim, because your homeowner's insurance should be a 100% owner occupied home unless you have this endorsement. And then finally, sinkhole coverage. Sinkhole, you see cars that are, these things that swallow up cars here and there. But this also, homes are susceptible to this as well. So just wanted to kind of just, give a heads up about some unique endorsements or kind of added coverages that are not standard to the policy that are out there today, and definitely available to homeowners depending on the carrier that they choose. Perfect. So I'll hand it over to Sutanya to talk a little bit more about homeowners insurance and the ins and outs of the policy.
Okay, so when I first bought my house, like many people, I didn't understand homeowners insurance coverage. I just went with the natural flow. Someone referred me to someone, and I purchased homeowners insurance with my fingers crossed that everything would be okay. All right. So at the end of this presentation, our hope is that you'll be more confident when it comes to homeowners insurance and actually understand what the coverages entails. All right. So one of the most important pages in your homeowners policy is your declarations page. And this page is important because it lists your coverages and how much you're paying for it.
And if I could add one thing,
Go
Sutanya,
ahead.
with the deck page in mind, is that as realtors, like you have to get all this paperwork in line for the closing, and that, always take a look at this coverage, look at the policy really quickly, just to be in the best interest of your clients, to say, hey, listen, based on what you learned today, is the coverage that insurance provider has given them sufficient enough? And do they potentially need a policy review to make sure they get a second opinion on this? Because if there's something that stands out to them, it makes you look like a hero that you pointed that out to say, hey, I couldn't help but notice that when you sent me your homeowner's insurance policy, I noticed that you had a hurricane deductible of X. Do you know what that means to you? Or that you had, limited coverage on your dwelling, right? So once again, we'll open it up to questions at the end, but the hope, to Sutanya's point, is that not only can you educate yourselves on your own policies, but as your clients come in with their own coverage, that you could provide some education to them as well.
Okay, so as far as coverages on a declarations page, one of the first coverage on the declarations page is dwelling. Dwelling, definitely one of the most important coverages, because not only does it set the tone for the other coverages on your policy, but it's one of the first things that people see when a customer or when a client comes to me. The first thing that I see, first thing that a lender will see is the dwelling. A common misconception when it comes to dwelling is that it is the market price of your home. It is not. Okay, a dwelling is basically how much the insurance company calculates on how much it will cost to rebuild your home from the ground up, including material and labor, if in the event that there's a total loss. All right, another coverage is coverage B, which is other structures. And other structures, it means just that. Anything not directly attached to the property is considered other structure. An example of a other structure is a shed, a fence, detached garage. All right, coverage C, also known as personal property. The way that I like to explain this to my clients is if you flip your home upside down, everything that falls out is your personal property. So your couch, your television, your clothing. And this is a part of the coverage that you're able to have a say so in and be like, okay, I think especially if you're a person who likes, the finer things in life, I think I need more coverage on personal property. All right. So this is something that you can kind of play with your agent. Another coverage D, loss of use. This coverage, basically the insurance company pays out a certain dollar amount for you to stay in a hotel or for your client to stay in a hotel or Airbnb until the home is done with repairs. All right, coverage E, liability. Liability, exactly what it means, third party. Basically, this coverage comes in if someone tries to sue you. All right, it's a snowy day, didn't shovel the sidewalk, someone walked and they trip on the sidewalk, which does happen. So this coverage is very important. If I would splurge on the coverage, it would definitely be liability. Make sure you have enough to protect your assets. All right, medical payments to others, exactly what the name suggests. If someone accidentally gets hurt on your property, this portion pays out medical bills to the person that is hurt. It does not apply to the people in your household. All right. All right, so a deductible, what is a deductible? A deductible is how much you pay before the insurance company repairs or replace any damages done to the home. Common deductibles are 500, 1,000, and 2,500. As far as choosing the right deductible, you want to make sure that it's a deductible that has your financial interest at heart. If you, for example, you want to choose like a super high deductible, if you know that, God forbid, if something happens, you don't have $2,500 to pay out on a claim. So the deductible is definitely situational and based on what suits you.
And one thing to add here, especially if you are doing real estate transactions throughout New Jersey, is that in New Jersey, a lot of insurance companies now are having hurricane deductibles as a percentage. So if you ever get a deck page that says hurricane deductible 2, like what does 2 mean? 2 is basically 2% of whatever they list their dwelling for, right? So to Sutanya's point earlier, the dwelling is the physical structure of the house. So if someone was insuring their home for $500,000 and they have a hurricane deductible of 2, that means if a hurricane ever hit our area and caused damage to their house, 2% of $500,000 is $10,000. So their deductible in that incident would be $10,000. So just some food for thought.
All right, so here are some optional coverages or endorsements on your homeowner's policies. I'm not going to go through all of them in details. Tom went over some earlier. So we have water backup coverage, identity theft protection coverage, sinkhole collapse coverage, home computer endorsement coverage, and scheduled property. So it's very important to go over with your agent, hopefully be myself, but it's very important to go over with your agent just to see what coverages apply to or suits your needs.
Water backup, I know I mentioned service line earlier, and that's the one I'll go a little bit more in depth in this conversation. Service lines covering the pipes underground to your house if they were ever have an issue and rupture. Water backups basically saying if water or sewage were to ever back up through your pipes or more importantly, a lot of people in their basements may have a French drain and a sump pump. And a sump pump basically pumps out water from the home in case the ground was ever too saturated with water that would seep into your home. If you ever lose power due to a storm, if there's so much water coming into the home because and the pump can't keep up with it, it will cause it to back up and then cause a claim. So those are 2 different endorsements, but ones that we highly, highly recommend, especially with someone that has a finished basement that maybe has that sump pump involved down there.
Right. All right. So in addition to helping my clients have the best coverages or find the right coverages for their homeowners insurance, this is absolutely one of my favorites to discuss because I also like helping people save money. All right, so here's some of the discounts. When you bundle your auto and home insurance, there's a discount for that. There's a new homeowner discount, an alarm system discount. There's a discount when you pay in full, and there is also an early shoppers discount. When it comes to the early shopper discount, I like for my clients just to like push it out like a week or so. That way they can save some money there.
Yeah, and this is just, as your people are getting ready to close on the home, the sooner they get their homeowners insurance with most carriers, the better the rate's going to be. So even if it's, 2 months out, you're talking today, and the closing date is maybe not until July, tell them to start looking into homeowners insurance. The sooner they get it, the better the price point's going to be.
All right. So how much does insurance cost? It's definitely going to vary, right? It's going to vary. It's going to be dependent on the location, size of the property, how much coverage you think you need, and how much it costs to rebuild the home. One of my favorite things about working for Comparion Insurance Company is that there is absolutely no property that I cannot insure, whether it's a flat roof, a home that is in a flood zone, investment property, homes going through significant renovations, vacant property. At the click of a button, I'm able to shop through over 20 plus A-rated carriers to make sure I'm helping my clients find the best coverages with the best pricing as well.
And one thing that is not mentioned on there, but is, a factor when it comes to homeowners insurance rates is credit. And that's also a factor when it comes to auto insurance rates. You could live across the street directly from your neighbor and have the same exact house, could have vastly different homeowners insurance or auto insurance rates based on credit. So it is a factor that probably 95% of insurance companies factor into rates nowadays. All right. So we're going to move on from homeowners insurance, and we're going to move on to flood insurance, right? So, what is flood insurance? Flood is the temporary condition of partial or complete inundation of 2 or more acres of normally dry land or properties, right? So think about it this way. It's just that it's kind of sudden downpour, that maybe overflows something in the local area, or maybe that the ground is so saturated that the water has nowhere else to go, that inevitably could potentially seep into a house. So when it comes to water, like a lot of people will say, well, is it covered? Well, I always say, well, tell me what happened in that particular scenario. Because I mentioned earlier service line coverage. I mentioned water backup coverage, which are both endorsements on a homeowner's insurance policy. Now, this is flood insurance. So flood insurance is a completely separate policy, right? It's not something that you can simply add to a homeowner's insurance policy. And mostly when people need flood insurance, the mortgage company is typically going to notify them that they're going to need flood insurance because they live in a flood zone. All right. We don't see, we were talking to Donna about this earlier. We don't see people that don't live in flood zone too overly proactive to get flood insurance in place, even though it's not too expensive of a policy. Mortgage company will make it very known to the people, hey, listen, as part of your closing, not only do you have to get homeowners insurance, but you have to get flood insurance today. All right. So we're going to talk about 2 things when it comes to flood insurance. We're going to talk about the NFIP, which stands for the National Flood Insurance Program. This is a government-run program that got instituted after Hurricane Katrina. All right. And basically, the government stepped in and said, we're going to basically kind of run the program. Insurance companies can sell it on our behalf. But regardless of what carrier you go through, and if you have the coverage the same, the carrier price point will be exactly the same. All right. So whether it's Liberty Mutual, whether it's Nationwide, whether it's State Farm, whether it's Allstate, if the coverage is the same, the price points can be exactly the same with the NFIP program. And then in a little bit, I'll talk about private flood insurance. All right. I'm just looking at the time I have to make sure I'm good to go. All right. So the National Flood Insurance Program, it's a single peril policy. What that means is a single risk. It only covers for flood insurance, nothing else. It only covers for direct physical loss to the dwelling and personal property. So for example, if you had another structure like a detached garage at your shore property and a flood happened, that detached garage would not be covered, right? All right. So also there is a maximum amount of coverage on this of up to $250,000 for the physical structure of the house, and only limits it up to $100,000 for personal property. So you can think about some of these really nice properties people have throughout the greater Philadelphia area that may live in a flood zone, but also that maybe also have a seasonal property down the shore. If you're maxing out your coverage at $250,000, there's a lot of gap in between of how bad a claim could potentially be. There is a 30-day waiting period unless it's a new closing, right? And the reason the National Flood Insurance Program put that in place was that they didn't want to see homeowners in the northeast part of the country see a storm forming down in the Bahamas and down in Florida and say, oh my gosh, I'm going to go get myself flood insurance right now, just in case the storm hits me and I'm out of luck. There is a 30-day waiting period. But like I said, if someone's doing a home closing, we don't have to worry about that waiting period because once again, we got to get set up for closing. All right. And if a home is currently under construction during that time, the deductible is doubled. All right. So I'll talk about deductible in a little bit. As you can see here, I won't read through each one of these, but this shows you there is limited coverage when it comes to the NFIP program on what is covered and what is not. All these things that you can see here right on the screen are not covered via the NFIP program. All right. So it's some exclusions. Exclusions means that these things would not be covered. So once again, it's sewer backup, seepage, overflow from a sump pump, just general seepage or leaks or pressure of weight or water. This is just, once again, from that definition of flood, the sudden inundation of water and basically to the physical structure of the house and also the personal property. Deductibles, if the home was built before 1974 with this program is $2,000. And then if it's after 1974, you can actually drop it down to $1,250. I typically recommend a higher deductible. It makes you, less susceptible to the putting in claims. All right. I would also add this, there is separate deductibles. I forgot to mention that. As obviously you can see it on your screen, that if there is damage to both the physical structure and then also your personal property in the home, that there are separate deductibles for each. Typically on a primary homeowners insurance policy that we talked about earlier, that if you had a claim that impacted, your roof and then damaged personal property and inside, it would just be one overall deductible, not in the case of the NFIP program for flood insurance. All right. So what does your client need to get a quote and to get it as accurate as possible? Obviously, you can see everything here on the screen. The things that really kind of jump out to me: how many floors in the home, excluding the basement, square footage. Obviously, is going to have a big impact. The number of elevators. Some of these houses in the South Jersey Shore definitely have elevators due to the size of them. So all these things that you can see on the screen will impact the rate, but it's also what they're going to need to get a quote and get an accurate quote. All right. And then, so after the Hurricane Katrina, like I mentioned, the National Flood Insurance Program was put into place by the federal government. In the last 4 to 5 years, private flood insurance companies have started to pop up, meaning that these are companies that specialize in flood insurance policies. And with that being said, more often than not, they're a better price point and often provide much better coverage. The two companies that we use here at Comparing Insurance are Neptune and Palomar. When we think about the private flood, like I said, they're probably in the infancy stage of insurance carriers, but they roughly take up $300 million of a $3.8 billion market. So the overwhelming majority of flood insurance out there in the marketplace is currently with the government-run program. But as time has developed, we've placed more and more people with the private flood insurance because they can, to my next point, get much better coverage, right? So the program we just talked about, the max is $250,000. With private flood companies, you can get up to $4 million on the physical structure of your house. Once compared to $100,000 on personal property, you get up to $500,000 here. And then you can also add these optional coverages that it doesn't give you the ability to do on the other policy with if you have a pool, if you had a basement, or the additional living expenses. And what we mean by additional living expenses, if there was a claim on your home due to flood insurance and that you cannot live there, your insurance company will pay for you to live somewhere else while your house is getting rebuilt. All right, that's not a part of the NFIP program. And like I mentioned, that with that, you have a 30-day waiting period. With this, typically it's less than a 30-day waiting period unless there's a known storm that is in the works. All right. So we just at the end here, I think we're pretty good on time. Yes, 3 minutes to spare, Donna. Not bad, right? We got through everything. Sorry for the rapid approach to this, but we had a lot of information that we wanted to get out there and also provide you all of Sutanya's contact information, as you can see on the screen. But we'll open it up to questions. We haven't been manning the chat, so I can take a look at that, or Donna or Matt, if you have anything in the chat, please share it. We'd love to answer.
Yeah, we have some questions from past President Heather Patrone. Heather, would you like to come on screen, ask your questions in person?
Oh, sure. Why not?
We'd love to see you.
So you had mentioned that the cost had gone up on an average $300,000 property, that we would normally be somewhere between 8 to 1,000 ish. What is the new range?
I would say, to be on the safe side to that, you probably want to look in the $1,300 to $1,500 range.
Oh, wow. Okay.
Yeah. Yep.
Okay. So,
And Heather, I would say this, like there's a lot of factors that will go into that, right? So the newer construction homes, you probably be in that like $900 to $1,100 range, right? If the house was built in the last like 15 years. But once again, the older the home, that's going to factor in, because just the way those homes were built, if they want them to rebuilt that way, it's going to cost a little bit more to get those materials that are not as readily available today.
okay. And then do you also have any carriers that cover knob and tube wiring? And if so, do they have any special tentacles attached to it about the knob and tube?
Yeah, so we do have, or we have about, Foremost is probably the prevalent company that we use for knob and tube. That I believe off the top of my head, that when we do that, they ask that they get it replaced within a few years and kind of have that kind of checked off as a to-do list, but not to have it done initially. What we typically also find with knob and tube is, you can buy this at like a Home Depot, is that a lot of knob and tube has been disconnected, in which there's no active current running through it. And if that's the case, then we're okay with that. And probably 50% of carriers will be. But if it still has an active current running through it, that's where carrier options are a little bit more limited, because it does pose a fire risk.
AKA, they don't like it.
Exactly.
Trust me, we all don't like it, but if there's a carrier, that's always comes up to be a question, especially if buyers are purchasing a property and they're willing to take on,
Yep.
the knob and tube eventually. It's getting a carrier in between.
Exactly. Yep.
And I believe Mary Ellen Camisa had a question.
Yes, Mary Ellen. Hi, Mary Ellen. Mary Ellen asks, do people take both IP and private flood insurance at the same time?
No, they typically go with one or the other. And more often, now I will say this, if it is an FHA loan, they have to go with the National Flood Insurance Program. But if it's just a private loan, they can go with either option. But like I said, we typically find that the private flood insurance is a better policy overall, provides more options for coverage, and typically a better price point. But they wouldn't double dip. They would go with one or the other.
Okay. So Kathy Camp, good morning, Kathy. Kathy asks, does the coverage cover a protection or passes?
Say it again. I'm sorry.
The question is, does the coverage cover a protection if the homeowner passes? And Kathy, you might want to join in here and by that question.
Yes, in other words, if something happened to the homeowner, they still have to pay the mortgage on the property. Does it cover anything to pay off the mortgage to the following spouse that's, is alive?
No, so that would be via life insurance. So
Or
especially
some kind of disability.
if anyone ever buys a home, I know they get solicited by life insurance companies left and right, that if you were to die, you can get what's called mortgage protection. It's basically life insurance. There is nothing that can be endorsed on a homeowner's policy or flood insurance policy that if the owner were to pass, that the mortgage would be paid off for the beneficiaries. That would just be a completely life insurance program to protect that mortgage.
Okay, thank you.
Yep.
Do you have any policies that cover empty homes?
We do. So we have so there's two different ways of looking at a vacant well, I should say three. We do, if someone's in active military service, by all means, we'll do it without an issue, right? Now there's a difference between vacant and unoccupied. Vacant means there's nothing in the house whatsoever. No one's living there. If someone is buying a house and they're looking to fix it up, but it's going to be vacant while they're fixing it up, we're okay with that. But most insurance companies want someone to move in within 6 months. Some will go up to 12 months. Now, unoccupied means that there is furniture there. They're just kind of in an in-between stage. And most companies are okay with unoccupied because typically someone's going to get in there sooner than later.
Thank you.
Yep.
Any other questions? Excuse me. No other questions? So then it seems like this morning is a wrap.
Oh, I had one. Sorry.
Oh, go right ahead.
Hi, good morning.
Good morning.
Good
Morning.
morning, Jay.
Curious, has there ever been a time or a case where the requirement for flood insurance has been fought? Like, let's say before closing, a property is currently under a map that might not be as updated with FEMA. And so they
Ye-
go back to FEMA and say, hey, we just pulled a new map and now we figured out, this is no longer, in a flood zone, so to speak. So I was just curious, have you ever dealt with a case like that? And if
Yeah,
so,
Jay, that does happen from time to time. And I know that the flood zones, I'm not sure the exact how often they do it, but they will remap. And, as a homeowner, that's something that typically that prospective homeowner would work with the mortgage company to kind of say, all right, now this or that is not in a flood zone, right? Because at the end of the day, what's happening is that the mortgage company is making sure to protect themselves because they're holding the majority of that money of that loan, right? Because the homeowner's kind of paying that principal off over time. But if anything happens and there was a flood and there's no flood insurance, the homeowner could just walk away. The mortgage company's gonna be stuck with that. So that's why they have to force, if someone cancels their homeowner's insurance and we notify the mortgage company, and the mortgage company will go in and enforce insurance on a property, whether that's primary homeowner's insurance or potentially flood insurance as well, because they got to protect themselves. But yeah, Jay, to answer your question, there, we've seen it from time to time that they come back and say, well, I don't think I'm in a flood zone. I think, they do their research, they bring it back to the mortgage company, they prove it, mortgage company agrees, and boom, they don't have to have it.
So it's definitely up to the lender.
gotcha. Thank you.
Yep.
Okay, one other question here. Mary Ellen asks if you can explain why it is cheaper to shop early to get a discount.
It's a great question. I think from the insurance company's perspective, it just talks about the responsibility of the individual, that they're not waiting to the last minute. And it's, some guys with calculators that figured out that this is a better risk class the earlier they do that to kind of get it set up. So yeah, I think it's just basically, like I said from the get-go, overall, the responsibility kind of getting that done ahead of time. These companies just give a better discount for doing so.
Great question.
Okay, do we have any other questions this morning?
Donna, we thank you for having us. We really,
Thank you for
hopefully
being
see
here.
everybody at future GPAR events. Please tell your colleagues that, I know that Matt and Donna said they're going to get this out on YouTube and email.
Yeah.
If you found it valuable, please, tell them to check us out. And if, whether it's yourself or any of your clients ever need, help with their homeowner's insurance or rental property, whatever that may be, please give us a shot. We'd love to see if we can help them out.
Yes, and also if anyone could think of another topic specific to insurance that you would like to see us cover in the future, do not hesitate to reach out to us. Because Sutanya would be more than happy to help us with that specific topic and offer another class to cover that. Likewise, if you have any questions concerning your insurance needs in the future, don't hesitate to reach out to Sutanya directly to be able to help you with those needs. We thank everybody for being here this morning. It was great to see everyone. Please remember that the YPN event is being held this evening. and check your email, or I believe Matt dropped in the chat the registration link as well. You will get one free drink ticket. And I'm sure everybody's like eager to see one another. It's been a long 3 years. So on that note, then we're going to wrap up. We thank everybody for being here this morning. We thank our hosts for providing this opportunity for everyone. And everybody have a great rest of the day.
Thank you, everyone. Have a happy